Welcome back to Economic Lifelines Nigeria. Before the break, we looked at the role central banks have played in boosting economic development globally. Now in Nigeria, the central bank is playing a substantial role in the growth and recovery of key sectors of sub-Saharan Africa's largest economy. But just how significant? Let's find out from some of the companies that are on the receiving end of these economic lifelines.
The Bank of Industry Loan or Intervention Fund, which intervention fund we got in 2009, which was about 2.2 billion naira, and it has helped us immensely in reducing our cost of the funds. And then in 2012 we got another loan for a project which is 2.9 billion, which is at 10% interest rate, although the intervention fund was only at 7% interest. And both these are helping us and encouraged us to go for this investment. If these cheaper funds are not available, would have not embarked on this project.
This help of $1 billion, 1 billion naira by the BOI fund through CBN, this has really helped us, because there we are paying only 7%, so we are saving up almost 3% on the interest rate. But only thing what I would like to say that this amount of intervention fund, 1 billion naira, where our total project cost was more than 6 billion naira, and high bank interest rates here, because on working capital we are paying interest rate of on average about 19 to 21%, average is coming to 20%. So this is really affecting our working. We have approached the government. Government gave us one benefit, that at least the raw material imports which we are importing, their duty was 5%. On that they gave us duty waiver 5%. That way they have helped.
It was a really good for Bank of Industry and Central Bank of Nigeria to launch this facility for the industries. At the same time, I want to state that 200 billion which was earmarked for intervention fund is little less, because if we want to be competitive with the world and we want to stop the importation, we have to see that we produce the goods at reasonable price.
Prior to the intervention fund, which is, I would say, the BOI intervention fund was very helpful, very positive, and very good initiative from the government to help industries, entrepreneurs who have put up a business to cut their cost, which they are paying very high interest to the banks. Unfortunately, the loan amount or the intervention fund amount was so little, and most of it has gone to the power sector. So we got very little benefit out of it. My group could get hardly 0.6, 0.7% of the total benefit, which is just a drop in the ocean. I wish government looks into it more seriously and increase the funds limit as much as it can.
When someone comes and is borrowing at 18%, right, and in doing productive enterprise in the manufacturing sector, in aviation or in power, and then he needs to pay over 10 years or 5 years, because 10 years is like a stretch with banks, okay, and then he has an option to then borrow at 7%. Technically, between 20, 21% and 7%, a third of your financing cost is gone. Now, if I give you a tenure of 5 years, and then someone comes and says you can now borrow for 15 years, technically the impact immediately on how much cash outlay you must put aside for debt service is gone down by roughly a third as well.
Between 2011 and 2012, the Nigerian Association of Chambers of Commerce, Industry, Mines and Agriculture conducted a survey and found that only 6% of industrialists access the funds available to them.
The model CBN uses has to be changed slightly. You have the banks acting as agents. So the banks are supposed to look at the loans, go through the credit process, and give out the loans and on the back of a CBN guarantee. Now, I think you have to put more onus on the banks to ensure the loans they're giving out, they're not just relying on the CBN guarantee and giving out loans they shouldn't be giving out. That if the loans do go bad for a reason that is from a bad credit history or for something the bank has done and not following through its credit work, that they tend to suffer for it and don't just rely on the CBN. Because otherwise the bank will just give out the loans knowing that they'll get the money back from CBN no matter what happens. So they make sure they keep to the terms, and if they don't and the loans do go bad, they take some of the pain. I think that's part of the reason. I think secondly, you have to look at the banks upskilling their credit departments, because a lot of the issues we have in banking, not just from intervention funds but other funds, the credit departments are not up to scratch. You have a situation where loans are given out, there's no follow through, there's no post disbursement intervention to make sure the loans are used for what they're supposed to be used for. You monitor the loans and you ensure the company is doing what it's supposed to be doing, and that has to be upgraded.
The truth is that what we have without the intervention fund is not near as good. What the banking industry can present is not near as good as what the intervention funds can present. Now, the intervention fund in itself is structured around, it's not a fund that you take for rent-seeking purposes, because you require bank guarantees, and bank will go through their normal due process and risk assessment protocols to ensure that they are well done. Because the banks still retain 100% of the risks, right? They ensure that it will be managed properly. And don't forget, the banks are private sector led institutions. So to that extent, I think that the intervention fund has been extremely successful. I mean, from zero to where we are. Now, in terms of the areas in which it has focused on, I would agree that it has focused on major areas. There are interventions in agriculture, intervention in manufacturing, in power, in aviation. These are typically very challenged sectors. Okay, and maybe like I mentioned, including something to resolve the mortgage-related issues. Maybe there are additional sector focus that we could look at. Okay, but I think the funds, in my opinion, have done extremely well.
The Central Bank of Nigeria is credited for the success of policies deployed over the last few years to bring down inflation and to stabilize the exchange rate. However, the CBN has also made a considerable effort towards the recovery and growth of some key sectors in the economy. So far, results have been mixed. Going forward, emphasis will be on the banks managing these funds to resolve the issues of accountability and follow through. Keisha Gitari, CNBC, Africa.